there in our life.
Good day, everyone, and I want to welcome you to our first webinar for the year, and as far as I know, for the ACFE South African chapter. So my name is Jaco. I'm the CEO of the ACFE South Africa, and it's my privilege to host this webinar with Stephen, as well as ENS, who's sponsoring this. Thank you very much. And then also Edward, who's going to be the co-sponsor in this event. I want to thank the two speakers and ENS for coming forward and helping us with this presentation. And I look forward to learning more from you two. Thank you.
Thank you so much, Jaco. Thank you, and welcome, Edward, my colleague. It's great to be here speaking from my home office in Melkbos in the Cape, but it's really great to reach out to all of you. I'm going to put our slides up in a few minutes. I'm going to just run through the introduction, because I think when you're not logged on, if you log on after I've put the slides up, you may not get access to the information. So we'll just wait for more delegates to attend. I can see from where I'm sitting that we're sitting currently at 532, and it's like a clock that's just rolling with people joining every minute. So please bear with me while I just walk you through the introduction, and then we'll put the slides up. And the slides will be available for you as well after the event. And we've put a lot of detail, a lot of information into this seminar. So I hope that you're all well rested, that you're ready to learn the ABC ins and outs of corruption. And the risk always when we do any education on corruption, whether it's global corruption or local tender abuses, is we could be teaching a number of crooks. So as subscribers to this webinar, I hope that none of you are going to use the information that we share with you today for illicit purposes. And just on that note, I'm going to share with you one of my cases a few years ago. I lecture at the University of Cape Town, Stellenbosch, and the University of the Western Cape on fraud and corruption. And UWC in particular has a seminar, a certificate course on corruption. And I did an investigation for one of the academic institutions. And when I introduced myself to the head of procurement that I was investigating and wanted to interview, he said to me, "Meneer, onthou meneer vir my. Sir, do you remember me?" And I said, no, I can't remember you. You must remind me. Where do I know you from? And he went on to tell me that he was on a course that I lectured at UWC previously. So he's one of the people that used the information that he learnt for nefarious purposes. So it is real, it does happen. And if we listen to the American psychologists, they tell us that out of every 10 people, there is one person that is inherently honest. I hope that those stats don't apply to the audience today. If it does, we've got problems, because then there's at least 90 crooks in the audience today, which is a scary thought. So moving on to just the agenda, I'm going to talk about the corruption threat. We're going to run through some definitions, and then we're going to talk about the types of tender abuse, procurement fraud that happens in South Africa. And I'll draw on some of the cases that we have been investigating over the past number of years, and some of these have been really high-profile corruption cases. Then we'll go into an overview of some of the global landscape, because there's a lot of global enforcement that is happening currently in the market with bribery violations, where companies are the perpetrators of corrupt activities and they're bribing in order to win lucrative contracts. And that has particular ramifications for larger organizations that trade with the UK, the US. So I'll go through the United States FCPA, and then Edward will take over and just walk you through the UK Bribery Act and some of the big enforcement actions. And you'll see that history has been made just in the last few months with the largest ever enforcement action against Airbus, which culminated in a $4 billion penalty cumulatively that was shared between the French government, the US government, and the United States, the US, French, and British. And then after that, I'll resume and go through some of the South African requirements, and we're going to share the CIPC guidelines as well. And there's some important guidance as to what companies need to do to prevent corruption. And then we'll run through enforcement trends, the third-party risks, and some of the best practice guidelines. And one of the best practice guidelines is, how does a corporate respond when it identifies corruption in its own organization? And we'll give you lots of tips, lots of advice. And for those of you who are planning to claim the 3 CPD points available for the webinar, you need to pay particular attention, and I'm going to give you some clues. I'm a very lenient lecturer when I lecture at the universities. So when I emphasize and say that something is really important that you should be aware of, pay attention, because there are 10 questions that you will need to answer in order to claim the CPD points. And the answers are all in the webinar, and I'll try and highlight when we cover that. So that's the agenda for today. You can hear that we're going to cover a huge amount of information. Starting with definitions, there is no universal definition of bribery or corruption, but there are elements that overlap with most of the definitions. Bribery is a specific offence involving the exchange of something of value. You will use that term, something of value, whenever we talk about bribery. And it's something of value to the receiver, which is given in the hope of getting some undue benefit in return. Transparency International defines bribery as the offering, promising, giving, accepting, or soliciting of an advantage as an inducement for an action which is illegal, unethical, or a breach of trust. And inducements, as you will hear later when we talk about the definition of gratification, it covers money, gifts, loans, fees, rewards, or any other type of advantage. Corruption is the abuse of power or the inducement to abuse power for personal, political, or criminal gain. I'm also going to share with you some of the history, because when I was preparing for this webinar, I started looking back as to when we had the first recorded cases of corruption. And it goes back to the beginning of the creation of law in the state, and was already in antiquity considered to be an evil plague in society. And it was said to negatively affect public administration and the administration of the political system. The earliest records of corruption were found to have come from the Assyrian civilization. From found plates written in cuneiform, the archaeologists managed to discern how and who had accepted bribes. And then under Roman law, they had a definition which is not far removed from current definitions of corruption. Corruption was defined as giving, receiving, or claiming benefits in order to influence an official in connection with his work. But notwithstanding the fact that the Romans had a good idea of what corruption was all about and they defined it, they couldn't alleviate corruption because members of the Senate and senior state officials were the main culprits in Rome itself and the remote Roman provinces committing corruption. And then the last piece of history that I'll share with you before we go into the meat of the presentation is Machiavelli is quoted as saying that corruption leads to moral degradation, bad education, and bad faith. And he considered republics more corrupt than other regimes. I'm going to pause for a moment and we're going to put up the slides. We're on 565 delegates and the clock is still rolling, but I think we can't leave the slides for too long. If you don't see the slides, you will be able to access them later, so just bear with me for a second while I share the media content. Great. Okay, I've now put the slides up. I hope that you can all see them. And there's the agenda, which we've just gone through. Definitions, the history of corruption. And now we're going to move on to the corruption challenge in Africa. Transparency does a survey every year. We're late this year, and it might be one of the impacts of COVID-19 in that they haven't released the 2019 results of their index as yet. But if we go back to the most recent index, it reflects that 2/3 of Africa score less than 3 out of 10 on the corruption index. And this means that corruption is almost endemic in many jurisdictions on our continent. And it means that it's very difficult to get things done without paying a bribe. And that places a very high bribery risk on corporates doing business in South Africa and other parts of our continent. Solicitation payments are also a big problem. In many jurisdictions, you can't move through border posts without paying a facilitation fee. We understand that even in some jurisdictions, facilitation fees are requested at the courts. If you want to photocopy documents, you need to pay $100. And the risk of bribes paid by agents and intermediaries in Africa is particularly high. And this is something that we will really emphasize in the discussion today, because third-party intermediaries, we call them TPIs, are a big risk to corporates doing business across our continent. A lot of companies do not pay the bribes themselves, but these middlemen, these intermediaries, often get up to mischief on behalf of companies. And we find terminology on documentation, on invoices, where they talk about smoothing fees, miscellaneous fees, sundry costs, escalation costs. There's all kinds of descriptions. So when you see that type of wording and you don't have a clear idea of what the agent or intermediary has done, be very nervous and probe and question. Bribe solicitation is big in Africa. Government officials use the fact that they've got to issue permits, that they have the ability to impose inspections, and that you are dependent on their goodwill. They use that as a mechanism to extract bribes. And then what also happens in Africa is many of our jurisdictions operate in cash economies where access to banking is not readily available. And you'll often hear officials saying you can't pay electronically because we don't have electronic systems. You need to pay cash. And companies have to be extremely vigilant when it comes to managing cash payments in Africa. Revenue and customs penalties are negotiable. That's another characteristic in Africa. A lot of the revenue officials will arrive at a company, demand a penalty, and they will wait for the company to be in breach of a requirement that the company may not be aware of. For example, when we did some work in the Congo, we discovered that corporates need a permit to draw water from the Congo River, but the revenue officials wait for the company to first draw water and then advise that they don't have a permit. And then they arrive with a penalty. And the penalty is usually $10,000 to $100,000 US, but it's all negotiable. If you pay cash, they will reduce it to 10% of the value of the original penalty. 10,000 is also a common number that is used in corrupt activities in Africa. You'll see that meetings with officials in Africa often come at a price. They ask the corporate to pay. So, for example, and when I say for example, I'm talking about real examples that we've identified on assignments in Africa. They will say to the corporate that we can organize a meeting with the Minister of Mines, to a corporate that wants to set up a mine in a particular jurisdiction in Africa, but it's going to cost $10,000 US as a meeting facilitation payment. Corporates wanting to start, if they can't have that initial meeting with the government, they're not even going to get past go. So often you'll find that the business wants to pay, and the function of compliance, risk people, investigators like members of the ACFE, the IIA, Compliance Institute, your job will be to put the handbrake on the company to make sure that they don't do illicit activity, even if they are trying to legitimately set up business. And my one warning that I'd like to issue to delegates today is that when you pay to have a meeting in Africa, you will always pay for meetings after that. So you've got to make sure that you don't initiate a bad practice. We're going to run through some of the procurement fraud and tender abuses in South Africa. We've done a lot of work on tender fraud in South Africa, and on some of our larger investigations, we found massive collusion between government officials and corporates when it comes to tender irregularities. They create artificial needs. So you need 10,000 licenses. The service provider suggests that he will provide 20,000 licenses. The service provider is paid for the 20,000, but they only need the 10. And the excess profit that is made out of that is just shared between the corrupt official and the corporate supplying those goods. So we have an inflated need. We also have seen a lot of tender fixing and drafting of tender specifications We've seen that the letters for a CEO are actually of one of the government departments. The head of department is actually drafted by the corporate. When we do the email reviews, we find these types of documents, and there's a lot of sharing of information, and often information is shared relating to other bidders as well, and that is all completely illegal. We also see lots of abuse by irregular expansion or extension of contract after award. So companies come in with a cheap quote, but it's important to remember that National Treasury actually issued a guidance a few years ago. In 31 May 2011, National Treasury issued an instruction in regard to creating transparency and accountability when it comes to supply chain management. And it stipulated that orders can only be expanded or varied by 20% of the original contract value unless there's express written permission from Treasury to exceed that. And when we do these investigations into corruption at government departments, we find that this rule is often completely ignored, and the contract value is sometimes almost double the original contract value with no permission or approval from Treasury. We also see that a lot of government departments avoid going to tender, and they make absolute abuse of the single source procurement exception, and that's a big area that gets exploited. What we also see, and we saw this with some of the commissions, the Zondo Commission, as well as the Nugent Commission, there were some middlemen that featured in those commissions, and they people of ill repute that get appointed to act as an influencer or middleman, in exchange for their influence, access to their political and government connections, they command a fee that is often a percentage from 1% to 5% of the contract value. And when we're talking about contracts and tenders that are worth 400-500 million rand, that translates into a lot of money for those influencers just using their connections. And usually what happens is the influencer will share some of this money that they've made so easily with the officials who then assist with the corrupt appointments. We also see that South Africa as a country has needed to create enterprise development and make sure that we empower previously disadvantaged organizations and individuals. But unfortunately, what has happened in South Africa is enterprise development needs are often exploited, and we have lots of fronting, we have lots of subcontractors who do nothing on projects, and all they do is they go in on paper as a BE partner, and they get paid often without doing absolutely a stitch of work. And what we see as a common phenomena is that they are then used as a conduit to channel funds back to the official. So if you take an example, you have a contract worth 100 million rand. There's a BE partner who is going to get 30 million, 30% of that work. The BE partner doesn't have to, in the right use of BE, the BE partner would be a partner, and the whole purpose of the legislation is to empower that partner to develop skills at the partner. But often they do nothing. They get the 30 million, and almost immediately, as the 30 million is received, some of it gets channeled to the corrupt officials. And when we look at the agreements with business partners, they're often very bland. They will refer to consulting services for a particular month. There's no detail on what work they're going to be doing. And then the last ingredient in procurement and tender abuses in South Africa is that they are characterized by inappropriate gifting, sponsorships, and donations. So internal auditors, you need to pay specific attention when you do your audit plan, build in a review of what is happening when it comes to gifting, sponsorships, donations, political donations. Those are all areas that are abused in South Africa. Part and parcel of that process is bid manipulation. The employee manipulates the bidding process to benefit a particular supplier. Often the employee will decide before the whole process who they're going to use, and the process is just to window dress, create a charade that things are actually competitive. But they know exactly who they want to appoint right at the start, and they accept late bids, they change bids, they allow for rebidding, or they cancel the tender when it looks like their preferred bidder is not going to be successful. And then there's lots of abuse that happens with adjudication committees and the scoring of tenders. When we investigate and we interrogate scoring, we can see that there's a concerted effort to ensure that the competitor that they don't want to use scores just below a qualification threshold. So if the threshold is 80%, you'll see how they engineer the scoring to make sure that they drop the bidder to just below the 80%, and then they're disqualified. And then the one area where we find a lot of abuse as well, and I've had some amazing cases on this, is fictitious suppliers, ghost suppliers. And there, what we've discovered is that management or procurement officials realize that it's easy to submit bills from a non-existent vendor to accounts payable department. And the problem with the accounts payable department is they're processing paperwork. They've got no idea whether or not a service has actually been rendered and whether or not the vendor actually exists. They rely on line management. And line management, when they authorize these payments to fictitious suppliers, all they have to do is either complete a payment requisition form, or in some cases, they just have to sign the invoice for the fictitious entity. And you must be wondering, but how can a fictitious entity just bill? All it is a letterhead and a bank account. And sometimes people that get up to this kind of mischief go further and they register with SARS, they register with the CIPC. So when the company does the screening, it looks like it's legitimate. But we had one case a few years ago with a manager who was very, very popular in the business, and he was well liked by the entire business. His job was he was the export sales manager, and he was authorizing transport payments. Someone in the business should have questioned and said to him, Clint, why are you authorizing payments for transport? That's not your job. He was the transport manager some 3 years prior to his promotion, but he carried on authorizing transport. And what that meant is that for 5 years, he authorized payments to a vendor that didn't exist. When anyone tried to phone this company, they would get a long engage signal, which is usually an indication that the line is disconnected, it doesn't exist. But when people couldn't get hold of the supplier, they would speak to Clint, and Clint would just say, don't worry, I'll speak to them, what's the issue? I'm going to see them later today. Just tell me what you need and I'll get it for you. No one at that organization ever engaged directly with that vendor. And no one other than Clint confirmed that they had provided services. And the company that he registered was a transport company. Our client used about 5 different transporters. All Clint did is he cut and paste from other people's invoices, created his fictitious invoices. And when we interviewed him and we questioned him about, why he did this, how he did it, he said it was just so easy. Whenever he needed money or he saw something that he wanted to buy, he went to his desk, pulled up an invoice, he had a template on his desktop computer, he would print it, and whatever the value was that he needed, if he wanted to buy a car, it was 200,000 or 300,000 rand. If it was just a new television set, it would be 20,000 rand. And he would print, and then he would walk the invoice down to the accounts department and say to them, ladies, you've got to move quickly today. I want this payment to go through as soon as possible. And because he was popular, he was very handsome, the ladies used to go out of their way to look after him and make sure that his invoices were paid properly. And that was 5 years. And when we actually went to the premises of the supplier, the grass was about 1 meter high. There was nothing. There was no building. It was just a vacant plot of land. The other case study that I want to share with you is one of the German motor manufacturers. I'm not going to say where, otherwise you will guess exactly which motor manufacturer. But what happened here is the head of procurement started living a particularly luxurious lifestyle. And the CEO noticed that this individual had renovated his home. And when he drove past his home, he saw all these air conditioners on every room. He saw that the head of procurement used to arrive at work on a Harley Davidson. He was also driving a brand new 4x4. And even though it was a subsidized vehicle, it's still an expensive vehicle. And in addition, this individual went overseas regularly. And when the CEO called me, he said to me, "Steve, I don't have anything concrete. I'm nervous because this guy is very close to a particular supplier. We think that supplier is potentially bribing him." Based on that information, the CEO actually made an affidavit concerning his suspicions, and we used the lifestyle audit findings, what we had found from public information as to what his asset base looked like. The CEO lodged the affidavit, and we asked the police to subpoena bank statements. And we got the subpoena, and when the police received the bank statements, it identified that not just the one supplier that our client was concerned about was bribing. There were actually 4 service providers that were all bribing. And what this head of procurement had done is when companies wanted to register as a service provider, he acted as a gatekeeper, and he demanded that they bribe regularly and make payments, and he gave them the number that he demanded in order for him to allow them to be registered as service providers and to maintain that service provider status. They had to bribe him. That reminds me, sorry, I'll just finish the story. They terminated the services of the 4 service providers, and this thing went all the way to the regional court, the specialized commercial crime court, and the head of procurement received a 6-year jail sentence. And the important thing that I want to emphasize with this particular case study is that the trigger was just the lifestyle. So when you see people in positions living a lifestyle that looks like it might be out of kilter or not commensurate with their earnings, be suspicious, do the extra probing, because that might be the only indicator of this type of corruption that we see. This reminded me of one of the cases I did years ago on one of the gold mines. And there the mine manager used to get involved in procurement fraud. What he would do is he would take a percentage of a supplier's company. So they have engineering firms. This was one of the older gold mines where they do something called vacuuming and vamping. They go through the mine heaps that were mined many years ago, and with modern vacuuming and filtration systems, they extract the gold ore that was left behind in the older processes. And this mine manager ended up having multiple interests in a whole number of suppliers. And what he would do at the end of the year, he would call the suppliers in. And before he had an interest in the supplier, he would say, "So tell me, you're doing engineering work at the mine. How much money did I spend with you last year?" And the director of the company would say, "Well, I think it was roughly 10 or 12 million. And the mine manager would say, "I'd like to buy an interest in your company." And the supplier would be a little nervous and say, "Well, okay, we can talk." That would constitute a major conflict of interest if the mine manager is also a shareholder in the supplier that he's appointing. But be that as it may, the supplier would then say to the mine manager, "What would you like to pay? We can get a valuation done." And the mine manager would take a coin, a 2 rand coin out of his pocket and flick it to the supplier and say, "This is what I want to pay for 20% of your company. You either give me the shares or we don't use you anymore." The problem for the mine manager is a lot of companies succumbed and they gave him interest. So he ended up with interest in 6 of the companies supplying services to the mine. But the engineering firm that he was this abrasive and aggressive with, they said, "No, this is not acceptable. Even if they lose that work, they're going to report this." And they reported it to the FD of the group. We were called in to investigate. And I remember the mine manager was so arrogant when we confronted him. He had a team of lawyers join in the interview, and he had counsel, 2 attorneys. And usually the lawyers insist on doing the talking for their clients, but he was so arrogant, he couldn't resist saying to me, "Listen, pal, if you guys are going to arrest me, just make sure it's after the rugby on Saturday." So let me move on. Another one that I want to share with you in terms of procurement fraud case studies is one of the maintenance depots at one of the large metros in South Africa. We did a massive investigation years ago, which was highly publicized in many of the newspapers. And what was happening at this particular metro is they had a maintenance depot that repaired the rubbish trucks, the trucks that remove your refuse, garden refuse and litter. And what happened in this scenario is that for years, this depot used to get clean audit reports. They were praised because their paperwork was fantastic. There was a complete paper trail for every part that was ordered. But the problem is the orders, the deliveries were all fictitious. Nothing actually changed hands. And on some occasions, when they actually delivered goods, the individuals involved in a little syndicate operating at the depot would drive the part back to the supplier, and the same part could be round-tripped several hundred times over. So it was quite a fascinating case. When we looked at paperwork, there was a requisition for a part, there was a PO, there was a delivery note for when the supplier supplied. Even if the supply was fictitious, the paperwork wasn't. That was completed. And the item would be taken into stock, virtual stock, and the mechanics would then complete job cards. There were a dozen people involved in the syndicate, from the mechanic to the supervisor, to the different administrators, the clerks, to the mechanics, right through to the security at the depot. They all got a little share. The agreement with the supplier is when he supplied fictitious parts, or when parts were returned to him, he would be paid by the municipality, and when the municipality paid him, he would pay 50% of whatever his profits were back to the syndicate members. One of the syndicate members actually blew the whistle on this corruption, which had been running for more than 10 years. But what he didn't tell us at the time is that he was actually involved in the corruption, and he only blew the whistle when he decided that he wasn't getting a fair share. But his information was invaluable, and based on that information, the city became aware, the municipality became aware of the fact that this corruption was happening. We did a massive investigation. We used all the junior people as 204 witnesses. Section 204 of the Criminal Procedure Act is the section that gives immunity against prosecution if someone testifies frankly and honestly in a court case regarding the corrupt activity. The judge can grant immunity against prosecution. So we used the juniors to go after the big fish. The big fish were the two supervisors and the director of the supply company. And it was a very successful case. Ultimately, what happened is the supervisor and the two supervisors and the supplier all ended up getting sentenced to a 10-year jail term. They appealed against the sentence, and on appeal, the sentence was upheld, and the court actually said that they thought the 10-year sentence was quite lenient, and the suspects, the accused, were quite fortunate that the court didn't use the opportunity to increase the sentence against them. What was really nice about that particular matter is it demonstrates quite clearly that clean audit reports don't guarantee that an organization is clean. And it's important to interrogate and to make sure that you've got a functional hotline and that whistleblowers are empowered to speak out. When we confronted the whistleblower, we discovered that when we discovered he was part of the scam and we confronted him, he admitted that he'd also participated for a few years. We fired all of the people that received kickbacks, including the whistleblower, and he took our client to the CCMA because he said, this is unfair, I've blown the whistle and I've now been victimized. And we had to explain to him that when you admit that you're part of a problem, that you've been involved in dishonest conduct, you've breached the trust between the employer and yourself, you can't keep your job, even though you did a good thing by blowing the whistle. And the benefit from blowing the whistle is you haven't gone to jail. He didn't like that. He was particularly annoyed with me, and he took us to the CCMA. And at CCMA, the Labour Court upheld the principle that when you admit to dishonest behavior, you've breached the trust with the employer, and the dismissal was upheld. Other common corrupt practices that we come across all the time is overbilling. That's usually collusion between the supply chain management official or the receiver of services, where they agree with the supplier that they will pay double or triple what a particular part is worth. And particularly when it comes to engineered items, it's very hard to benchmark what it should cost. And you've got to be careful, because buyers become complacent, and sometimes the overbilling happens just because the supplier realizes that nobody's checking their pricing. So you've got to make sure you keep your procurement people on their toes. And for internal auditors, random checks, doing some random sampling, and then getting quotes yourself to see what the market asks for a particular service is quite useful. And that's quite useful because people in procurement positions need to know that they are being monitored, that there is oversight. The other common phenomena is cover quoting, and many of us have had our vehicles repaired. You go to a panel beater, the panel beater says you need 3 quotes, don't worry, I can give you all 3, and he pulls 3 different quotation books out of his desk and gives you the 3 quotes. But obviously the quotes are more expensive than the initial quote where the work is going to be done. Sometimes we have other external businesses colluding in order to cover each other, and then they share the work out amongst themselves. Business redirection is also something that we see a lot of, where management insists that we've got to use a particular company. And one of the favorite party tricks of government officials in procurement roles is when they have a tender for a particular service, they often allow the tender to lapse deliberately, either so that they continue to use the incumbent for another year or 2 beyond the original duration of the tender, or they will find a completely new alternative and they will bypass all of the players that were on the tender. And there was one investigation we did also at one of the big metros where heavy-duty equipment was procured on this basis. But the new supplier wasn't on the original tender, and in 1 year supplying heavy-duty equipment, the individual made 27 million rand. When we investigated the individual, I had to interview him, and I said to him, "Sir, you need to explain why the municipality has spent 27 million with your business. You've got no heavy-duty equipment. We've done a check. There's no heavy-duty vehicles registered in your name. And coupled to that, you've got no prior experience in the sector. Why did they suddenly start procuring from you?" I knew the answer because we'd already identified that he had provided 2 BMWs, one for each of the procurement officers that were responsible for ordering the heavy-duty equipment. But he said to me, "Mr. Powell, clearly you've got no idea about black empowerment." So that's what we call business redirection. And then bid rigging is obvious. That's where inside information or specifications is given to a particular tender, or the tenderer drafts the specs in such a way, and they shouldn't be drafting the specs for a government department, but they draft it in a way that excludes the opposition. So they'll put in capacities, capabilities that they know only they can service. Need recognition schemes we see a lot of in the IT industry, and there's lots of situations where companies are persuaded to upgrade software, but the upgrade is to buy a system that is completely outdated and it's completely overpriced, and it requires lots of consulting time in order to build patches to make the software work. And it's usually a big investment by a government department, and they can't go back once they've gone down a particular road. And then bid pooling is just where the bidders get together and they agree who's going to win a particular bid, and they agree it's very much like the price fixing that we saw with the stadiums when the World Cup was being held in South Africa. And that is also a breach of the Competition Act. And then the last little scheme that I want to talk about is slush funds. A lot of factories, a lot of manufacturers create reject goods or byproducts. And in the textile industry, you'll find that a big textile business will create a factory shop. Management will convince head office that the factory shop is doing dismally, So what they're doing is tempering the expectation of management. So when they see that there's very little money coming in from that particular entity, that factory shop, they don't question. And very often, senior management will share the proceeds. And we've had cases where senior management have had credit cards on a slush fund account. And I had to interview a chartered accountant once on a slush fund that was happening at a particular textile company in Cape Town. And when we interviewed the financial director, who was a chartered accountant, he said to me, no, but he runs everything by the book. Each of the 3 directors, the COO, the financial director, and the CEO, each one of them has a credit card on the slush fund account, and he makes sure that they spend equally, that nobody gets more money than any of the others. And when I explained to him, what you're doing amounts to tax fraud, because what you effectively doing is you're taking a profit off book and you're distributing amongst senior management. And this is pay-as-you-earn fraud, as well as a tax fraud on the company, by the company. It's completely illicit. He thought, because he kept perfect records, that it was legit. And when I explained to him that this attracts jail time, he was very, very upset. And that happens a lot. So when you come across slush funds, be very careful. It's often just referred to as a party fund, but it often involves a lot more than petty cash or small amounts. Fronting, I mentioned earlier, a lot of the corruption that we've investigated, particularly over the last 2 years, has involved enterprise development partners, BE partners, and very often those partners have done nothing at all, but they've received millions of rands for their so-called work. We've got to remember that fronting is a very, very serious offence, and it attracts massive penalties. And the common fronting include window dressing, benefit diversion, opportunistic intermediaries. The next piece of work we're going to go through is quite important to remember, because when you have a corruption incident, when you've got a company that is bribed to win government contracts, there's a whole spate of legislation that is impacted. So firstly, in terms of the Companies Act, directors have fiduciary duties. They can't withhold material information from the board. They also have fiduciary duties to act in the best interests of the company, and they have a duty of care and skill. And when they breach that, directors can be held personally liable for losses to companies, shareholders, or other affected third parties. And the company can be held vicariously liable for third-party loss. So Companies Act comes into play in a number of areas. We're going to speak later in this presentation, the webinar, on Section 43, which creates the Social and Ethics Committee, which is an obligation to monitor the company's efforts when it comes to preventing corruption. And then I also want to mention that Section 159(7) of the South African Companies Act places an obligation on organizations that are subject to the Companies Act to have a dedicated facility through which employees can report impropriety or illicit activity confidentially. So the hotline is actually a legislative requirement, and a lot of organizations don't even know that. Most of you, I hope, will have fully functional hotlines. And on the hotlines, I must also tell you that in some of the larger investigations that we have done, and we've done some really big ones over the last number of years, there is a multitude of tip-off information that has really helped and facilitated our investigations. So if your company has a hotline that is dead, that is not getting any calls, you are not making use of an invaluable source of information to protect the company. When the company that gets involved in the corrupt activity is listed on the JSE, it's also important to remember that as soon as a company has price-sensitive information, there's a duty to report to the JSE, and companies have to produce what is known as SENS notifications. When companies collude with other suppliers and there's collusion involved in the corruption, It can also amount to a breach of the Competition Act, collusive tendering, price fixing, and that carries a maximum fine of 10% of annual turnover. And the criminal offence was introduced in 2016 that carries a 500,000 rand fine or 10 years in prison or both, as well as civil damages. FICA, this is important. You might want to pay special attention here for your test afterwards for the CPD points. But Section 29 covers the failure to report suspicious or unusual transactions. When there's a suspicion that a transaction involves the proceeds of crime, management have to report, and the failure to report carries a 10 million rand fine or 15-year prison sentence. And there's the penalty for the BBBEE Act. Misrepresenting black empowerment status or fronting carries also a fine of a max of 10% of annual turnover, and then there's automatic blacklisting for 10 years that also comes into play. So remember the FIC one, that might come up as a question, so that's important just to keep in mind. And then PRECA is also something that is often a question, and this is something that all of you should know. And very importantly, PRECA is our main piece of legislation governing corruption in South Africa. The other important ingredient of this PRECA is that it creates an obligation on persons in a position of authority who know, or reasonably to have known, or suspect that acts of corruption have taken place. They have to report that knowledge or suspicion, and a failure to report carries a fine or a 10-year maximum prison sentence. So please pay attention to that. This is something that all of you should know, and if you didn't, you need to know it. Poker created the crime of racketeering. It also created the asset forfeiture legislation, both of which come into play when there is corruption. Racketeering is an offence. It's organised crime. So when you have a pattern of criminal activity, acts of corruption or fraud involving a group of people committed over a series of transactions or a few years, that is known as racketeering, and that carries a 1 billion rand fine or life imprisonment. So that is probably the most serious offence that we have in South Africa when it comes to white-collar crime. And then there's the MFA, the PPPFA, and PIA that all come into play with procurement rules, misrepresenting BEE, tender irregularities, and those all allow for cancellation of the contracts. And when there are breaches of procurement rules, National Treasury has the ability to blacklist a company. Blacklisting is what we refer to in South Africa as disbarment. So it's important to remember that National Treasury can blacklist. It's not dependent on a conviction. Any department that has suffered from fraud or corruption can apply to National Treasury to have the entity blacklisted. The entity will be given an opportunity to explain why it believes it shouldn't be blacklisted, but the discretion lies with National Treasury. Now we're going to move into the next level of corruption, and this is important. And what this is all about is the impact of corruption on organizations, the compliance risk, because some of the global regulators robustly enforce prosecution against companies that bribe. So it's very important for all of us in the audience of this webinar to appreciate that when your organization bribes, there's a whole range of consequences that can ensue. And when we look at the corruption index, I always like to put the map of the World Transparency Index world on perceptions of corruption into my presentation, because it shows that corruption happens all over the globe. There are a number of jurisdictions. The yellow and the mustard colors are where corruption levels are perceived to be lower, and that in that grouping is the United States, the Scandinavian territories, as well as Australasia, and then Latin America, Africa, Asia, India, etc. Those are all regarded as highly corrupt territories. When we look at the scores for Africa, you'll see that some of the jurisdictions, Angola, Zimbabwe, Kenya, are particularly low. The score is out of 180 countries, and Botswana always comes out as one of the cleaner countries, but some of the jurisdictions from Nigeria downwards are really difficult to do business in and to navigate corruption risks. They say that 2/3 of Africa score less than 3 out of 10 on the corruption index. And they say that the oil-producing nations are the worst of all, and that includes Nigeria, Angola. And there's a famous quote that I like to refer to, and they say that oil is the major lubricant of graft in Africa. And in that regard, Nigeria has had more enforcement action than the rest of Africa combined. The reasons companies may want to avoid corruption is because the fines are substantial. We're going to go into the fines in greater detail later, but the fine against Airbus is a cumulative fine to the French, US, and UK governments of $4 billion. And you'll see that over the last 4 years, the US government has made almost 10 billion rand in fines that have been imposed against companies that bribe. So the fines are a big reason why companies avoid getting involved in corruption and why they spend on compliance and remediation. Remediation is an important term. You see that it's the 4th bullet, and it's important for all of you to understand what we mean by remediation. When you have a corrupt incident, when the company discovers that it has bribed and there's been a breach of its anti-corruption policies, a breach of process, and maybe an intermediary or middleman has paid a bribe, it's important to show the regulator that you have remediated. And remediate is remedy, that you have fixed the problem. So when you have a bribery incident, you've got to train your people to make sure that they understand the rules. You've got to review your policies to make sure you understand why the policy didn't work. If you didn't do due diligence on your business partner, you need to enhance your due diligence process. These are all steps that the company takes in order to fix the problem. And that includes firing the perpetrators, terminating if it's a business partner. The other reason companies avoid getting involved in scandals is the reputational harm. You see that companies that have suffered from bribery scandals, if you just look at the ones on the list here, Bain and the SARS, KPMG, McKinsey, with the ESCOM dramas with Anuj Singh and Brian Malefi, the reputational damage is massive, and it takes years for companies to build up their reputation. You just need one incident and it can virtually destroy a company. The companies on this particular slide have a very small, much smaller base than they had previously, because when you suffer that reputational harm, your customers desert you. Many of your customers will have robust compliance programs which require them to distance themselves from unethical business partners. The banks, the financiers, they all will also not want to do business. So the reputational harm causes massive fallout and damage. And then remediation fees is what you spend on lawyers like ourselves to come and fix your compliance program when you've had an incident. And that also involves doing anti-corruption risk assessment. Derivative action risk is actions by shareholders. In the US, these are particularly popular. They bring class actions against directors and the board for failing to protect the company. And you'll see from the Airbus and the Société Générale matters that we're going to explain later that appointment of a monitor is one of the consequences of corruption in your own company. Who is the monitor? The monitor is an anti-corruption lawyer like me who gets appointed to oversee your business for 2 to 3 years to check that you are now going to behave ethically. And then the next consequence is disbarment, that blacklisting that we spoke about that National Treasury can implement. Blacklisting can destroy a business if a large component of your business is dependent on government contracts. Disbarment will take that business away for sometimes 10 years. In South Africa, it's up to 10 years. In other jurisdictions, even longer. And then the last important point as to why companies avoid getting involved in corrupt activity is director accountability. The US and other regulators are putting more and more individual directors in jail to show that corruption doesn't pay. It goes without saying that companies are liable for agents that they appoint. So if the company says, we're clean, we don't bribe, but they then authorize or instruct a third party to make payments to foreign officials, that they will still be held liable. They're also liable when they make payments to a third party knowing or being willfully blind, when they just look the other way, that money will be paid directly or indirectly to a government official. And it's important to understand that over 70% of US enforcement actions today involve bribe payments made by agents, consultants, and other third parties. The regulator doesn't have to prove actual knowledge of the bribe. Knowledge can sometimes be established by the fact that the company didn't do a due diligence when they appointed. The US Foreign Corrupt Practices Act, I'm going to run through very quickly. It has two key components. The one is it provides for anti-bribery provisions, so it prohibits bribes to government officials outside the US. It also has a books and records provision that requires companies to maintain accurate documents. And if the US regulator can't prove that the bribe took place, but there are gaps in your books and records, you'll be found wanting on a books and records provision, and that carries massive penalties. It's not obligatory to report in terms of the FCPA. In South Africa, Section 34 of PRECA obliges us to report suspicions of fraud, theft, extortion, corruption where the value exceeds 100,000 Rand. There's no such reporting obligation. But the US tries to incentivize self-reporting. So they say that voluntary disclosure influences the decision of the DHA to consider a non-prosecution agreement or a deferred prosecution agreement. So these are new terms that you must also try and remember. NPA is not just the National Prosecuting Authority, it's a non-prosecution agreement in compliance terms, and DPA is a deferred prosecution agreement. I'm not going to go into too much detail on this one, but I included the slide on ACFE enforcement settlement because it demonstrates that the US is actively looking at corruption in Africa. This affected the Congo, Niger, Gabon, and the former Prime Minister of Gabon's son was the middleman or intermediary used in this corruption, which ended with ACFE paying 412 million to resolve DOJ and SEC cases. Petrobras was the record enforcement action until the Airbus matter. This one involved the fallout with Dilma Rousseff, the president of Brazil, and there was a lot of corruption. Petrobras is the state oil company in Brazil, and a lot of companies were bribing in order to get preferential treatment or to get orders of fuel from the state-owned oil company. And that all came to the fore and resulted in a 1.78 billion record enforcement action. That was the highest fine in 2019, and that has been overcome or overtaken by the Airbus enforcement action. And then the last one that I wanted to include on FCPA enforcement is the JP Morgan case, because in this one, it involves HR practices. JP Morgan Chase and a Hong Kong subsidiary paid the settlement of 264 million to resolve FCPA offenses for awarding prestigious jobs to relatives and friends of the Chinese government officials. They called this the Sons and Daughters Program, and they actually had an HR process to go and recruit these members of royal families and give them jobs in order to try and get work from those officials. And the Federal said JP Morgan Chase didn't have adequate controls. Sorry, the slides are just moving. Let me go back. And then the next one that I want to refer to is Société Générale, which is an indication of US and French collaboration. In this matter, the US DOJ and the Office of the Prosecutor in France collaborated, and they reached a settlement in terms of which SocGen paid 585 million for corruption in Gaddafi-era Libya. And of that money, 293 million went to the French government. So the money was shared between the US and the French government on a joint enforcement. The trends, you'll see 2016, 2.48 billion, 27 companies resolved their cases. 2017 slowed down. 2018, the DOJ and the SEC stepped up their game. 2019 equaled that number for 2018. So 2018 was just under 2.9, and the number was just over 2.9 for 2019. And you'll see that Ericsson came in, MTS, a Russian telemobile company, at 850 million, Walmart at 282 million, and Fresenius 231 million. Non-US companies continue to dominate the top 10, and two of them are Swedish. Ericsson and Telia are both Swedish telemobile companies. And if you think back to that corruption index map that I showed you a few minutes earlier, Sweden is regarded as one of the cleanest countries. It's number 3 on the TI risk perceptions index. And it shows that TI isn't a good predictor of how companies will behave. And the other one to point out on that is Keppel Offshore, which is a company based in Singapore, which ranks at number 3. They were also involved, and they've just fallen off the top 10. So we've seen a lot of cooperation between global regulators that is going to expand. We've seen the US government starting to share settlements with jurisdictions impacted by the corruption. And we saw that with SOC General and the Petrobras settlement, and we've seen it to a far greater extent on the Airbus matter. And there's a lot of leniency if companies remediate properly. And the important message is that the company, when they fix and remediate, they have to demonstrate that the new entity is completely different to the company that bribed historically. And there's the top 10. You see Airbus, the new number 1. But I must just qualify, Airbus is a combination of France, UK, and US. So the proceeds were shared between the 3. And then Petrobras was the number 1 for a while. Siemens must be very happy with the corruption levels over the last few years, because they were at the top of this list for almost a decade. But since 2018, they've been pushed off the top, and they've gradually slipped down that list. I'm going to hand over to my colleague Edward James, and he's going to walk us through the key components of the UK Bribery Act. Over to you, Ed.
Good afternoon, everyone. And before I go into some of the into the United Kingdom Bribery Act, I'd like to take a few moments and just walk through some of the history of this legislation, which seems to have been fairly slow to be implemented and enforced in the United Kingdom and abroad. So the legislation was signed into law in 2010, but only came into effect in July 2011. And it seems like with many things under this act, it really was quite slow with the uptake, as the first significant enforcement action was only in 2015, where our South African Standard Bank entered into a settlement with the UK government for breaching the act. Now, the act itself was really a product of widespread criticism for the UK government, in that there was a large enforcement action involving BAE Systems, an arms maker, and I don't know what it is with the UK and the arms and aerospace manufacturers and fines, because the 2 case studies I'll go into shortly relate to Airbus and Rolls-Royce. But post BAE, where there was a settlement in 2010, many members of the public and other interest groups criticized the UK government for being quite soft, or at least the public perceived it to be quite soft on a UK company. So the UK government was under pressure to increase the teeth of its legislation, so to speak, and the UK Bribery Act was really, many commentators believe, a product of that criticism and pressure. Now, the Act was viewed as novel because of Section 7, which introduced an offence that is commonly referred to as the failure to prevent bribery offence for companies or organisations. Now, this particular piece of legislation is something that we are regularly asked to give advice on, that's Stephen and myself and our firm, because of its wide-reaching implications for companies. Now, what Section 7 effectively means for companies is that there is a reverse onus on companies if persons associated with those companies engage in bribery and corruption. Now, for those of you who are also in South Africa, like myself, we do pride ourselves on being innocent until proven guilty. And in this case, that onus is reversed. So for a company that has an employee or an agent or director that is found guilty of engaging in corruption whilst performing services for or on behalf of the company, that company will automatically be criminally liable under the Section 7 offence, unless it can show actively that it implemented adequate procedures to prevent bribery and corruption from occurring. So what are those adequate procedures? What can a company do to effectively prove its innocence? So the UK Department of Justice has released a guidance that I think many compliance practitioners like Stephen and myself considered the Rolls-Royce of compliance guidance from any government, which may be inappropriate given the enforcement action against Rolls-Royce. But really it sets out 6 simple, easily understood principles that any company can follow and adopt in order to prove that it has done enough to prevent bribery. The first principle is having proportionate procedures, and in terms of that, companies really do need to have the basics in place. They should, of course, have an anti-bribery and corruption policy, but beyond that, companies must have specific tailored policies based on the risks that that company actually faces. So, for example, a company may engage in extensive entertaining or corporate entertainment. So in those situations, it should have a proper gifts and entertainment policy in place. There are a multitude of other policies that should be considered depending on your company's specific circumstances. The second principle is that there should be top-level commitment, also referred to as tone from the top. So it's not enough in the eyes of the UK government that there's simply a compliance department to whom all responsibility is delegated. There must be active top-level leadership of an anti-bribery program in a company. The third pillar or principle is that there should be risk assessments. So any company really should be risk-focused, and it should conduct bribery and corruption specific risk assessments to understand what are the key touch points where the organization actually faces a risk that bribery or corruption may occur. The fourth principle is conducting due diligence. So many of you in the audience probably do this already on a daily basis, if not in your investigations, as part of your compliance functions. And that is really understanding the background of third parties with whom a business is going to engage in any type of relationship. That's when new relationships arise, and also on a periodic basis in terms of existing relationships. So it's considering compliance databases, considering adverse media and the like. The fifth principle is communication and training. So it's not enough that a company simply has good paper policies that sit in a cupboard or sit on an intranet. Those policies, the relevant rules, the relevant steps that employees must take need to be communicated to a sufficient audience. And that audience may go beyond employees themselves. It may in fact include third parties, including high-risk vendors or high-risk business partners as they are called. The sixth and final principle is monitoring and improvement, monitoring and review. In terms of this principle, I think there is widespread recognition that the world is not static. Things change, and a company must constantly respond to the changing risks and circumstances that they face. A good example that Stephen will deal with is risk brought about by COVID-19. So many companies have considered the risks that they'll face from an organizational continuity perspective, just in terms of empowering its people to work from home, but how many companies have considered the bribery and corruption risks that currently arise or may arise as many companies come out of the widespread lockdowns? Now, before going into some of the enforcement actions or the case studies that I'd like to touch on briefly, I think it's useful just to comment on the main regulator in the country, in the UK, which is the Serious Fraud Office. So I think in any country, the corruption legislation is only as strong as the enforcement. And certainly with the SFO, I mentioned it took 4 years for the first significant DPA to be entered into since the coming into force of the UK Bribery Act. So the SFO has come under significant criticism in the last few years. The former Prime Minister, Theresa May of the UK, who since Boris Johnson has come into the picture, seems like a distant memory. She brought into question the continued existence of the SFO and even suggested that it merge with certain other regulators in the UK. I think a lot of that criticism may have been due to the drawn out or the lack of enforcement by the SFO of high-level cases, and I do also believe that the SFO has regained significant ground in recent times, and a lot of that can be attributed to new leadership. So Lisa Osofsky has taken over. She's a dual British and US citizen and a former FBI investigator. And since she has taken the reins at the SFO, there certainly has been widespread reforms at the SFO, in terms of which it sought to professionalize and become significantly more aggressive in its enforcement, almost modeling itself on the US regulators and how they enforce bribery and corruption incidents in the US. So the SFO has certainly gained more ground, and I think the two case studies that I'm going to share with you certainly illustrate that. The first case study involves Rolls-Royce, and the SFO started its investigation back in 2012, and what triggered this specific investigation was adverse media reports in China about the way in which Rolls-Royce had conducted its business. Now, what is quite interesting with this particular enforcement action is that Rolls-Royce effectively investigated itself. Whilst the SFO takes a lot of the credit for that process, most of the investigation was done internally. So there were only over 30 million documents reviewed and ultimately disclosed. There were 229 investigation interviews conducted. Many of that information was fully disclosed. And the total cost of the investigation before Rolls-Royce even paid a single pound or dollar to any of the regulators was £123 million. So I think many of you who, like me, work in South Africa, those are fairly eye-watering figures, and we may be working in the wrong jurisdictions when we see some of those figures. But effectively, that internal investigation uncovered numerous instances of bribery and corruption, particularly involving government officials, particularly involving customers, where Rolls-Royce effectively bribed in order to win work and to sell its products to different customers. I think for me, a key question that arises out of the Rolls-Royce case is, why would a company like Rolls-Royce go and spend £123 million to investigate itself and ultimately prove its own guilt? And to me, the clear answer that comes out of much of the commentary on this particular case is what Stephen referred to as debarment. So with Rolls-Royce, it ultimately ended up paying £497 million to the UK government. It also paid another $170 million to the US government, $1 million that is, and $26 million to the Brazilian government. But before doing so, it made a calculated decision, and that was, what was its potential liability or loss of business if it was found guilty of corruption in the UK or elsewhere. And in terms of that study, Rolls-Royce realized that if it was found guilty of the criminal offense, as opposed to entering into a deferred prosecution agreement, which allows it to pay a fine and not have that record against it, it would avoid potential debarment, not just in the UK, but around the world. Ultimately, in terms of that equation, Rolls-Royce realized that it would have lost 15% of its global order book if it was found guilty. Another 15% would have been at risk. And of course, that doesn't take into account future work. In many countries like South Africa has an up to 10-year debarment for companies found guilty of corruption. The next enforcement is really, I suppose, the new global blockbuster in terms of quantums for bribery-related offences, and that's, of course, the Airbus case. So the Airbus investigation was initiated in 2016 in the UK by the SFO when Airbus reported certain incorrect reporting to the SFO and to the UK government. And the investigation then spread past the UK into France and into the US. The US seems to get in on all the big investigations, and this was quite an interesting investigation because of the role that the French played, and ultimately also got, well, in fact, the lion's share of the ultimate $4 billion settlement that was paid here. Now, the various investigations uncovered quite widespread acts of corruption. It was found that bribes were paid through shell companies and through the Autonomous Strategy and Marketing Unit, which was really set up to boost sales in emerging markets. It's particularly relevant for those of us that work for companies or clients who have widespread operations across the continent here in Africa. But this particular unit was described by a former chief executive officer of Airbus as bullshit castle, and I do believe that's because of the fraudulent nature of the activities of this particular business unit through which the bribes were paid. Now, to me, the most interesting thing in this case is not just the eye-watering figures that were shown on the previous slide that I'll go back to, but more just how this particular company, Airbus, was found guilty in terms of Section 7, notwithstanding the fact that it actually had procedures in place to prevent bribery and corruption. In fact, if any of you read the judgment in this case, you'll see that in 2012, Airbus actually hired an external consultancy to help it implement an anti-bribery management system. It had policies put in place. It had due diligence processes for third-party vendors and business partners. In fact, it even had a committee established to help it vet business partners that would engage in sales for and on behalf of the company. Now, despite this, the UK government still felt that it didn't do enough to prevent bribery and corruption. And the judge commented that up to September 2014, the procedures in place were just so lax in their enforcement, and the committees put in place met so irregularly and were so poor in the way that they conducted themselves that actually the company couldn't escape liability from simply putting wallpaper over the cracks. The courts found really that Airbus didn't do enough. Back over to you, Stephen. Stephen, I think you're still on mute. Apologies.
Thank you. Thanks, Edward. That was really useful. And the Airbus enforcement action is massive, and it really has demonstrated the power of the regulator in the UK. So, just get my slides back up. Thank you. More and more countries are getting tough on corruption. The OECD is one of the bodies that has really promoted anti-corruption efforts worldwide, and they continue to pressure governments to make sure that they pass robust legislation, that they promulgate robust legislation, and that they enforce that legislation. And everywhere where the OECD has criticized, we've seen a reaction from those governments. So, for example, Canada enhanced and amended its corruption laws and then secured their conviction. Brazil has made provision for fines of between 2 and 20% of gross revenue against companies that bribe, and they've realized that this is a revenue opportunity. And then France has really changed the way that they react to corruption. The French used to be accused of having a laissez-faire attitude towards corruption for years. And in 2016, at the end of 2016, they passed their corruption law called Sapin 2. And that is very similar to the UK Anti-Bribery Act, UK Bribery Act. And they use different terminology, but the principles are pretty similar. China has probably set the best example or best deterrent message with executions of government officials that have received bribes. And they've also imposed strong anti-corruption legislation. Russia became a signatory to the OECD Convention just before the World Cup, and I think that the OECD probably used the hosting of the World Cup as leverage to force Russia to sign, but even Russia has started to promote anti-corruption enforcement. South Africa has long been criticized for a lack of enforcement, so I always warn my clients that they don't want to be the scapegoat and an easy target when South Africa needs muscles and demonstrate that it is doing something about corruption. South African ABC laws, I'm not going to spend too much time. We dealt with it on the overview slide, that table which set out a very useful summary of all the legislation that comes into play when corruption happens. Just re-emphasize the reporting obligation in section 34 of PRECA, and Any person in a position of authority must report. Failure to do so carries a 10-year jail sentence. If any of you fail the test after all the clues I've given you, you don't deserve to be a practitioner. So moving on, we talk about gratification in our legislation, and as indicated previously, gratification can take the form of money or a variety of different mechanisms. Our corruption legislation is a bit more detailed because PRECA creates all these categories of corrupt activities, but essentially corruption in South Africa is the illegal, dishonest, unauthorized, incomplete, biased, or misuse of information or material acquired in the exercise of your employment, abuse of position of authority, or breach of trust, or violation of a legal duty of a set of rules designed to achieve an unjustified results, or that amounts to an unauthorized or improper inducement to do anything or not to do anything. And the simple thing is corruption. You either pay someone to do something they shouldn't do or not do something they should be doing. And then gratification, I'm not going to repeat. We've gone through all the different items that are included in that. What is important, and this is important for test purposes and for your CPD points as well, is to understand the CIPC guideline. It's a short guideline. It's about 3 pages long. All of you should have read this, and if you haven't, you need to Google it and go and read through. It is all governed, the anti-corruption requirements of the CIPC are governed by the Companies Act Regulation 43, which requires companies to set up a social and ethics committee. The Social and Ethics Committee has to monitor the efforts by the company in terms of the enforcement of the OECD recommendations regarding corruption, and then the Social and Ethics Committee also has to identify and evaluate corruption risks to the organization. And what the CIPC guideline says is that the best way to do this is for the company to implement a corporate compliance program. And they talk about doing a risk assessment, a risk evaluation to understand the exposure of the organization. And then this is quite important. There are 6 guidelines now. Edward took you through the guidelines that are built into the UK Bribery Act. These guidelines are not dissimilar. So top management, when I say they're not dissimilar to the UK Bribery Act guidelines, and they're also not dissimilar to the ISO standard, ISO 37001, which is the standard for anti-bribery management systems. We call it ABMS. The first principle is top management commitment that is common to all 3. The next one is clear practical policies and procedures. That is also common to all 3. The UK talk about proportionate procedures, but it's essentially the same thing. You've got to have policies, procedures, controls to prevent corruption. Principle 3 is communication and training. Principle 4 is periodic reviews. You need to update, monitor your system and update it regularly. That is referred to in the British and the ISO standard as monitoring. Principle 5 is due diligence. All of these guidelines require companies to really do homework on their business partners. If you appoint a bad partner, the regulator assumes you knew they're rotten and you appointed them for bad purpose. So it's important to do some basic checks. Identify who are the directors, do they have adverse history? If they look like bad people, don't appoint them. So make sure that your company is adopting the proper due diligence process. And then the last item that have been brought in the CIPC guidelines is auditing and accounting controls. Now you heard in the US FCPA, they've got books and records as one of the key provisions of FCPA. This has been separated out by CIPC as one of the compliance principles. So the next one, I just got a message from Yaku, which I'll share with you. Yaku has just asked me to remind all of you to start sending questions as we get closer to the end of the session. So it's now 3:30, we've got a half an hour to go. I'm going to try and cram the last portions of the seminar into the next 15 minutes, and then we'll open up for a 15-minute question period. We won't get to all of your questions, but we will answer them in due course. We will publish the questions and the answers on the ACFE website after the seminar. I just want to dwell on the auditing and accounting controls, because the difference between UK Bribery Act, ISO, and CIPC guidelines is this particular principle. The auditing and accounting controls is a requirement of the British and the ISO, but it's not a principle. The principle that is missing on our CIPC guideline is risk assessments. It's a requirement in terms of UK Bribery Act and ISO that companies do the risk assessment. But if you go back to my previous slide, the risk assessment is a recommended practice by the CIPC guideline in any event. So in my view, the guidelines overlap, and it is important for organizations to make sure, in South Africa in particular, that we adhere to top management commitment, we have clear and practical policies and procedures, communication and training, periodic reviews, due diligence, auditing and accounting controls. COVID-19 has brought up a whole range of risk. The current one is that a lot of companies are providing essential services and are allowed to be mobile and to continue to provide these services. So police, medical, food supply, fuel, all of those services and many others are allowed to continue. But this creates a bribe solicitation opportunity for policemen. I know most of us have been stopped in, particularly when I come up to Gauteng, I always seem to get stopped at these roadblocks with policemen asking to look at the license, and then a quiet pause while they wait to see what is going to happen before I ask for the license back. But they're using the emergency situation at the moment as a bribe solicitation opportunity. So it's important that you train your people and make sure that they understand, if you are providing emergency services, that they need to say no to these bribe requests and just say, sorry, I work for a company that has a robust policy, I cannot give you anything. And you'll see the policeman will wave you on, give your license back, and you'll move on. The other important impact is that after the lockdown, a lot of companies are going to be taking financial strain, and they're going to be desperate to generate revenue. And this is going to create an active risk in your organization, because your sales company are going to be driven by winning work, and passive risk. Vendors may seek to influence your procurement people to get you to buy their products. So those are two risks. You've got to make sure that you don't over-incentivize your salespeople in the post-lockdown period to win business at any cost. The next one is imports and exports. There's going to be a race to get goods in or out of South Africa, and customs officials, customs clearing agents, those are going to be corruption hotspots along with transporters. So make sure that your controls around that are robust. Don't stop doing due diligence just because of COVID. And then what also happens is the third risk is that companies cut back on budget, and they may reduce headcount, they may cut compliance spend, which just makes the problem even harder to deal with. And I really want to discourage all the corporates out there that are listening to this webinar to make sure that they don't cut in the wrong places. Compliance is going to be even more important than it was before lockdown. So I think if I was only getting 5 hours of sleep a night before lockdown, I don't want to know what it's going to be like later. But at least I'm catching up on sleep at the moment. I'm not traveling as much as I normally do. I don't think for the last 3 years, I don't think there's a week that had gone by without traveling. And now I'm in week 3 of not traveling. So these are just the principles for the ISO standard, which I've mentioned earlier, so I'm not going to dwell on that. Now I'm going to get close to the concluding slides, and this one I want to spend a little bit of time on, because when a company identifies that it has experienced a corruption scandal, customers are going to be nervous. Your finances are going to be nervous. Customers will want to blacklist and abandon you if it looks like your company is corrupt. So there are a number of things that corporates have to do, and that is, the first thing is gather the facts, understand what happened. And it's important that when you do that, you make sure that it is subject to legal privilege. If it's not privileged, a regulator can ask to see those reports. So make sure that it is routed through the right legal representatives in your own organizations and through external advisors so that you have legal privilege. The regulators often ask for documents even if they are privileged. I was in a call with an investigator from the SEC in the US just a couple of weeks ago, and the request was, I understand you folks have some information that may assist our investigation, and I spoke about legal privilege, and the investigator said, I realize that some of this may be subject to legal privilege, but it would be really helpful if you folks could supply that information. So what that does is the regulators put pressure on companies to waive privilege. And it's important to make sure that your organization maintains legal privilege, and you can exercise the decision that you will waive privilege, but it's your decision. If you don't have legal privilege, there's not even a debate around it. The next item is you've got to make sure that we take robust disciplinary and criminal measures against perpetrators where criminality is identified. I use the term terminate. I don't mean terminate as in, take someone out, get them off your payroll. That's what we mean by terminate. Make sure that we divorce the company from the rogues. Fulfill reporting obligations, and you'll remember from the earlier slides, there's a Section 29 FIC reporting obligation for suspicious transaction. There's a Section 34 reporting obligation in terms of PRECA. The PRECA forms are all downloaded. If you just download 34 reporting, it'll take you to the DPCI website. You can pull the forms electronically, and you can submit the forms electronically. So even in downtime, lockdown period, you can still do your Section 34 reports. And then if you're a listed entity, the JSE and the SENS notices come into play. You've got to make sure you don't fall foul of the JSE rules. And then you should be taking action to recover losses from the perpetrators. In a crisis like this, tone from the top is critical. You've got to show that this was not the mind and wishes of the company, that these were rogues that breached policies, breached our procedures, and committed acts that the company does not condone. So part of firing people is to demonstrate that your organization didn't condone the corruption. And that's where it's important, because a lot of times when we do these investigations, companies still have a lot of respect for the perpetrators of really bad stuff. And they want to give them golden handshakes, and they want to pay them for the next year or two. And that sends a message to a regulator that actually you were quite comfortable with whatever corruption that individual perpetrated. So make sure that you take strong, robust, decisive action and don't give golden handshakes to the rogues. And make sure that this message is very vocal. Disbarment risk must also be tightly managed, because if doing business with government is the core of your business and you're now implicated in a corruption scandal, any of the impacted government departments can apply to National Treasury to have you disbarred or blacklisted. So engage with Treasury, talk to them, make sure that they understand that you are trying to fix the corruption, and then take action to compensate victims. If there's a particular entity that has been victimized and prejudiced by the corrupt activity, if it's a government department or a private company, make sure that you take steps to remediate that. Remediation is critical to this process. The regulator is expecting you to show that if the corruption is a legacy event that happened in 2013, 2014, you've got to show that those were bad people, they are gone, they're no longer part of this company. The company that we now talking about is completely new. There's new management. Make sure you get rid of bad management. And sometimes board members that were there at the time of the corruption will also need to go, because all of the corruption happened under their watch. So fixing the company at a board level, at a senior management level, and right through to getting rid of the perpetrators is all part of the remediation. Remediation also involves rolling out a massive training program to make sure that the bad behaviors, unethical conduct, and make sure your hotlines are functional. Review policies and procedures and make sure that you close the gaps so that you've prevented the recurrence. We're doing quite well on timing. We are going to go to questions shortly. Just before we get to the questions, I'm going to go to my last slide, and that is the concluding comments. And you guys can start sending questions through to ACFE. So to post questions, members need to refresh the page. I've just got a note from Yaku. So if you want to send a question, please just refresh your page, and then you should have the ability to send a question. So going back to the concluding points, we have to understand corruption can destroy your organization, both if you're a victim of corruption or if your organization is the perpetrator. Obviously, if it's the perpetrator, it may have global exposure if it's a multinational company that has an association with the US or UK. Make sure that you eliminate bribery and corruption because it's a hidden tax on your business. Business partners need special attention. Do due diligence on all your third-party intermediaries. Remember, we call them TPIs. It takes years to build a company's reputation and just one scandal to destroy it. When it comes to anti-corruption compliance, there's a famous quote from one of the deputy attorney generals at the DOJ. And that quote was, if you think compliance is expensive, try non-compliance, because it's much more costly to fix an issue before than after the fact. Investing in deterrence and compliance is investing in the sustainability of the organization. Now, on that particular point, I just want to share with you that we do a ton of risk assessments. We've done risk assessments for some of the biggest multinationals and banks in the country. And when we do the risk assessment, what we often find is companies are reluctant to spend on the compliance function. And I've come across entities that have multi-billion rand turnover, and they have a compliance team of 1 or 3 or 4 people, but they operate in 30 plus jurisdictions. You've got to understand that the regulator measures your company's commitment to compliance by the amount of investment in your compliance team. And for those of you who don't already have one, make sure that you find a compliance expert to be your compliance advisor and your compliance partner when you have issues or problems that you have to deal with. So that's the message. Those are the concluding points. Yaku has just sent me a question, which I'll just want to refer to. We want to know, for blacklisting of 10 years for BE infringements, are the directors blacklisted or the companies or both? Typically, the answer is that both are blacklisted, and I know for National Treasury on their register for corruption, they list the individual directors and the companies. So I don't think you will get away with just liquidating the company, closing, setting up with a new name. So that was the first question that I've received. The other thing I'd like to just share with you, one of the delegates messaged us to say that the Transparency International 2019 index has been released. So we will update the slide just on the index results. And I've also just Googled on my phone while I was busy speaking, and I've seen that the results are out. So for all of you, please do visit the Transparency International Corruption Index site. Okay, I'm just going to ask Yaku if there's any way that we can get questions up on screen. And then maybe if I take the slides off.
Stephen, I see that there is a question under the question tab. I think you also need to refresh. There's a question, if I maybe can read it to you. If the PFMA and regulations is silent on installment sales without interest, example, interest-free, and you suspect foul play, what can you do to confirm they are not fraud? Stephen? I think it's
Hi,
because,
Yaku. I think Stephen's reset. I think for the audience, we've needed to log out and log back in to have the questions and chat put up on the side.
yeah.
So I think it's Marco Badenhorst's question in respect of the PFMA.
Right.
And I think that, I mean, there's no simple answer in respect of, whether you suspect foul play. I think it would depend, obviously, where you are in the particular tender process. And where you stand, whether of course you are on government side or whether you're on the side of a losing bidder in the particular process. Typically if you're a losing bidder, there are different legal remedies. There are of course hotlines to different government institutions if you do suspect some form of foul play that you can use. So similar to any private company, there are many whistleblowing lines if there is post award of a tender or even during an award of a tender. And I'd typically encourage somebody to use those channels. Obviously, if you are on the government side, you can also use those channels, or you'd be an employee in one of those departments.
Great, thanks. Stephen, do you want to add anything?
No, I think that's brilliant. Thanks, Edward. And I'm going to take the next question from Ronaldo Lobo. So thank you for the feedback, Ronaldo. And if crime has been investigated and damning findings have been made and a criminal investigation is underway, but the crime is continuing, there are actions that can be undertaken. And my advice is that we should have an offline discussion, because it's for many of the illicit activities happening in that government departments and municipalities, this type of problem that you've identified and have exposed and revealed here is common. And it's because management are often part of the problem. So if we can get this type of situation into the hands of the authorities like the DPCI or the SIU, if there is a proclamation that covers this activities, it is possible to take it further. So I think that's, you mustn't become despondent. We can address these types of things. Edward, anything you want to add?
No, I think that's correct.
The next one is Motabisi Dlamini. Motabini asks that currently government is involved in a lot of emergency procurement. What do you think the points to cover on with procurement as ongoing audits should be? So emergency procurement is very, very scary. Edward and I have just helped to create an anti-corruption policy for the Solidarity Fund to consider, with all of the contributions from the public to the Solidarity Fund. There's obviously scope for abuse in those funds. It's important that you have robust controls and that you vet the beneficiaries very, very carefully, and that you are extra vigilant in this lockdown period, because emergency situations, crisis situations are a fertile breeding ground for corruption. So I know it's difficult because in blacklisting, not blacklisting, in the lockdown period, it's harder to do the normal procedures that we adopt, but we actually need to be extra vigilant. The next question I see is Suzanne Fulyoun has asked about, is there any advice that for clients that have to trade in countries like Angola? How do you operate by limiting your exposure? And Angola, as you saw, is one of the high-risk jurisdictions on the Transparency International Index. And that means that you've got to be extra vigilant with your business partners. You've got to do some monitoring of your business activities. So site visits, because it's a remote jurisdiction, and training of your people, and then vetting of those suppliers and your people, and making sure that they adhere to ethical processes is going to be critical. And because they're far away, the company is often reluctant to spend on regular site visits for internal audit and investigators, but it's an absolute prerequisite, because it's not what we know, it's all the things we don't know that is happening behind the scene. I hope that answers Suzanne. The next question is Alex Volker. Is the blacklisting of suppliers only implemented by National Treasury, and to what extent is it being enforced? Alex, that's a very good question. In South Africa, National Treasury is the entity that imposes the blacklisting, and I can assure you that it is being enforced at the moment. And what happens is the individual departments impacted by corruption, they apply to National Treasury to blacklist an entity. And as I mentioned in the session, it's not dependent on a conviction. So even just based on a suspicion of corrupt activities or a whole lot of red flags, National Treasury can consider blacklisting. So the system is working, and National Treasury do blacklist many companies. I know because I've acted for companies that have been blacklisted without good cause, and we've managed to get that overturned on a number of occasions. The next question, so thank you for that. Nico Pick, what other sources can I use to ensure legality? Sorry, let me just open that. If I've already done the basic screening. Edward, you want to run into that one?
Yeah, sure. So I think, Nico, I mean, it obviously depends on what you incorporate in the basic screening. A firm like ourselves, we typically use a combination, firstly, of a database that gives us access to global enforcement databases. Typically sanctions lists, all kinds of different databases maintained by the US, the UK, and a whole multitude of countries. We also use databases that try and collate adverse media, and we do typically also wrap in Google searches. On top of that, we do also use localized databases. Now in South Africa, those will differ from other countries. So we're quite lucky here in South Africa in that there are a host of resources available through suppliers like Lexis, Nexus, Windeed, etc. But we typically, if we do searches in other countries, we look at corporate records. Those are always extremely important to get a hold of and make sure that a company has been lawfully established, etc. And then we try and also ask for information. Many firms refer to discrete inquiries where they ask about people or companies' reputations and what they are rumored to have done or not done. Those can be helpful but can be unhelpful. We often prefer the approach of asking the third party for records to voluntarily disclose details of their compliance programs, details about their key persons, their shareholdings, their ultimate beneficial owners, etc. So I hope that helps, Nico, just in your query.
Thanks, Ed. I think that was very useful. Melvin Mafuma, you had a concern that employees turn whistleblowers lose their jobs, and understandably, according to PRECA and CIPC, however, does this not then deter whistleblowers who've had a change of heart or who previously participated in corruption? And you're absolutely right, Melvin. So one has to always try and find the right balance and make sure that you don't condone and turn a blind eye to abuses, because PRECA, as you know, has a reporting obligation. So what often happens with whistleblowers is they remain completely anonymous. To protect their safety, we often don't disclose who the whistleblower is. And the attitude of the company always will depend on the facts and how heavily their involvement was, what the benefits of that participation in the illicit activity might have been. And there is opportunity as well for whistleblowers to become tier 4 witnesses, where the state actually makes a call and the prosecutor will decide whether they're going to use the person as a witness and then give them immunity against prosecution. But the breach of trust is often a difficult thing to overcome. You know, it's hard to say to an employer, this is a reformed crook. He was a participant in a corrupt scheme, but he's now turned over a new leaf. Employers are not terribly sympathetic, but one has to look at the facts of each case and find the right balance. So the next question, Edward, I'll take Rapule. Rapule said, if there's apparent evidence of corruption in the organization, however, internal audit or services provided missed this evidence during the investigation, is it wise to reopen the investigation? Now, I don't want to sound like a lawyer, but I'm going to sound like a lawyer. It all depends on the facts. You know, so one has to look at this evidence, and if it justifies reopening, it might be useful. A lot of people sometimes don't understand how difficult the evidence threshold is for criminal prosecution. It's proof beyond reasonable doubt. So sometimes we may assume that people miss things, but they may have seen it and it might not have been sufficient. But it all depends on what that evidence is. So the next question, what are some points or factors that need to be considered in order to take appropriate action against, board members who are in charge of the overall governance, but might not have been involved in the detail of the corruption or fraud? That's a very good question, and it becomes very topical to particularly non-exec directors who are on a board, but they don't typically have access to a lot of information, and they often won't be involved, but the lack of governance and the breaches took place under their watch. And that often results in a breach of fiduciary duties. If they did everything to act in the best interest of the company, to ensure that the company had good governance, and notwithstanding their positive actions, the corruption still took place. And if they're not shown to have knowledge of the detail, then there's very little that one can do against the discussion, those individuals. So again, it'll depend on what exactly the facts reveal. Clinton, you've given some difficult questions around failures in public sector procurement, which have led to the intensification of cartel behavior in terms of the Competition Act. I would be interested to hear the extent to which you pursue matters under the Competition Act in addition to criminal proceedings. And my focus as an ex-prosecutor has always been on the corruption angle. But as you correctly point out in terms of your question, this might also amount to violations of the Competition Act. I haven't come across many where there is collusion between competitors in the corruption. Usually the cases that I deal with, if an entity is bribing a government official, they exploit that for their own benefit and they don't need to collude. So I haven't done many that also lead to enforcement in terms of Competition Act. So my focus really has been on criminal proceedings, the FIC reporting and the Section 34 reporting. I hope that answers your question, but I also want to make an offer to you to have an offline discussion and we can go into more detail. We're going to just answer one more question and then we'll wrap up. Edward, I think I'll get Trish's question.
Stephen, sorry for that. The session will be ending in a minute and a half. So what we'll do is we'll take all the questions and we'll send it on to you, and then we'll also forward it to everyone that participated. Thanks very, very much from my side, both of you and Edward, for being here, for participating and for making this a massive success. I'm going to hand over to Zanel to quickly wrap up. Zanel, thank you.
Hi, thanks, Yaku. And from my side as well, Edward and Stephen, thank you so much. As always, it's a privilege and an honor to have you with us. I'd also like to quickly thank our attendees. As everyone knows, this was our first ever webinar, so we really appreciate your support. Thank you for everyone, and thank you for attending. Finally, one last thing, once the session has ended, everyone will receive an email similar to the one that you received before for the registration. This email will contain a link to the questionnaire that Stephen mentioned earlier. This questionnaire must just be completed. It's an online form, so you can do it there. And this is done so that you can earn your CPE or CPD points. And the email also has a link to the recording of this entire session. So there's a link that says watch replay. So if someone there has or had trouble with connection, I know the weather's bad at some parts, so if there are some things that you'd like to revisit from the presentation, just click on the link and you'll be able to do that there. Thank you so much from my side. Stay home, stay safe.
Thanks, everyone.
Thank you, everyone. Stay safe.
Thank you.
Thank you. Bye.